Stop everything you are doing right now and stare at this screen. Imagine waking up to billions in wealth vanishing in hours. That's exactly what happened in the silver market. On Friday, January 30th, 2026, paper silver plunged from highs near $122 to around $95 in a brutal session. By February 2nd, it had cratered even further to the $78 to $83 range amid relentless volatility. Over $40 per ounce erased in what felt like a blink while you slept, the system shed trillions in notional value. But here's the twist that defies all logic. A crash should scream oversupply, flooding the market with cheap metal. Instead, physical silver is vanishing. Dealers scrambling, shelves bare. This isn't chaos. It's a deliberate illusion. A magic trick engineered to panic you into selling before the real surge hits. The paper price screams abandoned ship, but the physical world whispers, hold tight. Why? Because the game is rigged to shake out the weak before the overshoot explodes. Listen closely. This is your final warning before the curtain falls. While the paper price craters, the invisible battlefield is intensifying. Across major Iranian cities, massive billboards have emerged, depicting U.S. aircraft carriers exploding at sea. This is pure psychological warfare, eroding confidence in untouchable military power. The images are stark, damaged decks, exploding jets, blood-streaked stripes mimicking the American flag, accompanied by slogans like, "If you sow the wind, you will reap the whirlwind." It's not just propaganda. It's a signal of escalating tensions. American and Iranian drones are now circling the Persian Gulf in a tense standoff. Reports confirm unmanned aerial vehicles from both sides, probing defenses, testing response times. This is the loading phase where deterrence crumbles and raw fear takes over. One miscalculation, one drone strike, and the region ignites. Modern conflicts are won through silence, not explosions. Electronic warfare blinds air defenses and command networks in minutes, jamming signals, spoofing radars, rendering billion-dollar systems useless. Silver is crucial for these systems embedded in drones, satellites, and guidance tech. Its superior conductivity makes it irreplaceable in circuit boards, antennas, and shielding. Unlike gold, military silver is consumed and irretrievable once deployed. Fired in a missile, gone forever. Launched in a satellite, lost to space. Pentagon assessments, including recent supply chain reviews, highlight silver reaching mission-critical shortage thresholds amid rising tensions. Global military demand could spike 20 to 30% in conflict scenarios, per analyst estimates. As stockpiles dwindle, governments prioritize defense over civilian markets. This redirection would tighten civilian supplies further, amplifying the disconnect between paper and physical. The crash? It might just be cover for strategic accumulation. While Western markets dump paper contracts in New York, Eastern buyers are vacuuming up physical metal. On January 30th alone, over 26 metric tons of silver vanished from Shanghai vaults in one day. That's roughly 840,000 ounces, a massive single-day withdrawal. Shanghai Futures Exchange data shows inventories dropping from 482 tons to 455 tons almost overnight. At this pace, those inventories could deplete in under 3 weeks per recent exchange reports. But it's not isolated. The trend has been building. In the prior week, outflows hit 249 tons, one of the largest weekly drains in over a decade. Total holdings now at historic lows, barely 1% of annual global demand. Why the rush? China's reclassification of silver as a critical mineral last year, export restrictions tightened, funneling domestic production inward. Combined with industrial hunger for solar panels, EVs, and AI chips, demand is insatiable. The COMEX faces a deepening crisis. January delivery demand hovered around 60 million ounces. Recent CME reports show registered inventory at 107.7 million ounces as of late January. But open interest for March futures alone equates to over 760 million ounces. That leaves a staggering shortfall, coverage at just 14% of paper claims. The exchange invoked Section 4 C Force Majeure provisions. This emergency clause, per CME Group rules, allows settlement in cash instead of metal during disruptions. Invoked amid volatility spikes, like the recent margin hikes from 9% to 11%. But critics call it a bailout for shorts, letting exchanges dictate prices when physical fails. When paper and physical diverge this sharply, the exchange price turns into mere fiction. Trust erodes, and the system fractures. For major institutional banks stepped back from silver trading this morning as risk models collapsed. Reports from TD Securities show them closing tactical shorts at a $2.39 million loss. Others, including potential JP Morgan clients, issued massive deliveries to cover positions. They were caught shorting volumes of metal that simply do not exist in physical form. The paper casino is exposed. Currently, 900 million ounces of paper claims chased just 38 million ounces of registered metal. Updated ratios show even worse. Total open interest versus registered at 7-to-1 or higher per latest CME data. The entire setup relies on no one demanding delivery, an assumption shattering under pressure. As withdrawals accelerate, minus 33 million ounces in early January alone, vaults empty. Lease rates spiked to 8%, signaling desperation for physical undercurrent banking laws. Your deposits are essentially unsecured loans to the institution. Dodd-Frank reforms post-2008 allow bail-ins during crises. If a giant like JP Morgan faces a margin call on its massive silver shorts, your savings could be bailed in to shore up the bank. European precedents show depositors converted to equity holders overnight. In the US, FDIC protections are limited above $250,000. You're at risk. This isn't theory, it's codified in law. Do not be a tourist caught in the storm. Your immediate priority is the survival stack, 50 to 100 ounces. This base level provides emergency liquidity, tradable for essentials if banks freeze. History shows during crises like 2008, physical held value while paper plunged. This shifts you from vulnerable observer to someone with real options when systems strain. Next, build the stability stack, 300 to 500 ounces. This creates a buffer against inflation, currency debasement, and market swings. In 2026's volatile environment, it offsets risks from tariffs, trade wars, and Fed shifts. Finally, aim for the legacy stack, 1,000 ounces or more. This is wealth preservation across generations, immune to digital wipes or policy changes. Unlike stocks or bonds, it can't be diluted or seized via keyboard. History proves generational wealth demands knowing when to exit. Markets don't ring a bell at the top. You must spot the signals, monitor these 8 warning signs of an impending top. First, widespread retail frenzy. Long lines at dealers with premiums, surging over $20 an ounce. Mom-and-pop buyers piling in classic light-cycle mania. Second, media capitulation. Outlets like CNBC and Bloomberg dubbing silver a risk-free haven. When mainstream declares it essential, the smart money often sells. Third, speculative extremes. Futures open interest ballooning beyond 100,000 contracts on COMEX. Overpositioning signals exhaustion. Fourth, industrial pullback. Firms shelving projects as costs become prohibitive. When end users balk, demand peaks. Fifth, headlines trumpeting massive new mines in Mexico or Peru. Supply response lags, but announcements cool sentiment. Sixth, government interventions, strategic reserves unleashed to temper the rally. Official selling caps, upside. Seventh, technical breakdowns. A swift 15 to 20% drop following parabolic gains. Momentum fractures signal reversal. Eighth, extreme euphoria. Unanimous forecasts of $1,000 silver with no dissenting voices. When doubt vanishes, tops form. The paper price of silver can be twisted, manipulated by margins and algorithms. But physical scarcity always prevails in the end. Vault drains in Shanghai, and COMEX prove it. Demand outstrips illusion, like a massive ruby that seems counterfeit until proven under pressure. Silver's worth will be validated by the paper system's unraveling. The quiet window for clear preparation is narrowing. Prices may look fake now, but the reset builds beneath. When chaos erupts, only readiness matters. Don't wait for consensus act before the overshoot. Stay vigilant, stay prepared.